Well, this is a story of a position taken by one of my students in this stock, which is Yatharth Hospital. I wanted to discuss this with you. So, what had happened is one of my students, she called me and she said that she's interested in value investing as well. She likes swing and positional trading, but she wants to dedicate a certain portion of her portfolio to long-term value investing. And she had been studying some books, and from the knowledge that she acquired through those books, she decided to take a few positions. So she took around 7 to 8 positions, out of which Yatharth Hospital was one position that she took in her portfolio. Quite a significant amount when it comes to percentage of her portfolio, which she allocated to the market. So she had taken a position in this. I asked her what books she was reading. She told me. And then I recommended one book to her, which is written by the former daughter-in-law of Warren Buffett. Her name is Mary Buffett. The name of the book is The Interpretation of Financial Statements uh, by Warren Buffett. So it's a very small, very short book. You can finish reading that book in 2 days, maybe 3 days, not more than that. But it's a very powerful book for value investors. She has distilled the essence of how Warren Buffett looks at the financials of a company. And it is very easy to understand, even if you don't come from a finance background. So I recommended this book to her. And I also told her that this company does not fit the kind of criteria that is given in the book. In the book, Mary Buffett talks about the three different types of business models that Warren Buffett is interested in. I think one of the business models is about going with companies which have established strong brand value, a strong product which cannot be replicated. The second is a strong service that cannot be replicated. And third is low cost model, like trading company, where you buy low cost, you sell low cost, and you still make money. These are the three kinds of business models that are explained in that book. I recommend that you read that book if you are interested in Warren Buffett style of investing. So I told her that this stock does not fit into that criteria. I I I have studied Warren Buffett extensively. I don't remember Warren Buffett uh, taking a position in some hospital company. I don't remember that. Okay, as far as my readings are concerned. So I said that this company doesn't fit into that. Moreover, on 12th of November, sorry, 11th of November, the stock broke the 50-day simple moving average. As you can see here, this candle has closed below the blue line. So I informed her of that. Even from a technical standpoint, from a swing and positional trading standpoint, if any stock that breaks the 50-day simple moving average, uh, we become very cautious about that stock because nothing great happens below the 50-day simple moving average. In fact, nothing great happens below the 21-day exponential moving average. But in this case, the break came on low volume. As you can see, the volume is 375,000. The average is 550K. But it's still fine. It's not a sign of institutional selling or institutional collapse, what so to speak. She still held on to the stock, I think, and her mind was oscillating between value investing and swing and positional trading because since she is my student, she understands the value of 50 SMA. So probably she was nervous when the stock broke the 50 SMA. Now, when it comes to value investing and things like that, value investors are not supposed to look at charts. The value investor is only supposed to look at the company. By the way, she had done great deal of research on the company. It's not that she threw money at something that she did not understand. These days, you have Chat GPT and things like that. You can do a lot of research in a very short period of time by asking the right kind of questions, extracting the right kind of information from the internet. So she had done quite a lot of research, and she knows that value investors don't look at charts. A value investor is only concerned with three things: the business model of the company, the credibility of the management, and valuation. So she had done all three and she was confident of this. That is why she was not looking at the chart. But since she had also learned this swing and positional thing from me, she knew that there is a little bit of risk here. Volume was low, so probably she held on. She held on from one, two, three, four, five. Again, the break came. Again, it came on low volume. Again, I had a conversation with her, and she thought about the situation and she made her own decision. I did not, I just said that there is risk in the stock. I did not say come out of the stock. I just wanted her to realize that there is risk in the stock. I just want all of you to understand what is the risk in the position that you have already taken in your portfolio. I never said don't buy or don't sell a stock. I never say buy or sell a stock. I only say understand the risk and take a decision accordingly. It is your independent judgment. So my role in her trading or investing journey was to make her realize what risks she has taken in her portfolio and what the market or the price action is telling her. So, since she had knowledge about value investing and swing and positional trading, she combined all of that knowledge, sold off all the positions in her portfolio which were not doing well, especially broken below the 50. So she sold on this day, probably this day, or probably this day, one of these 2 days. She came out completely from the stock. Quite a significant amount of money was invested in the stock. And then I told her, now that you have come out of the stock, please don't look at the chart of the stock, because if you come out here and suddenly the stock starts to go up, right, you might feel regret that you should have held on to the stock. Well, that is not how you trade, or that is not how you invest. You cannot bring your emotions to this game. Once you are out, you are out. You are out for a reason. You are out because you used some logical analysis. So she followed my instructions and she did not look at the chart. But I, as you know, I analyze a lot of stocks on a daily basis. I scan a lot of stocks on a daily basis. Since this was trading on the, since this was trading above the 50 SMA, this stock was continuously coming in my list. Okay. And I just happened to check what happened to this stock after, I think after 2 weeks, the stock just came to my mind, and I just looked at what has happened in the stock. And I was browsing through YouTube, and somebody made some video about the GDP of India going up 8%. And suddenly on that same day, Yatharth Hospital falling 8%. So this was that day. So after this happened, somebody had made a video on YouTube, and I just saw that thumbnail. I did not open the video. I just saw the thumbnail. The thumbnail says India GDP up 8%, Yatharth Hospital down 8%. So I was suddenly, surprised. What 8%? How can something fall 8%? So I came to this chart and I saw this. Look at this. The volume is 790K and the real volume is 16.32 million. That's like 18, 16 or 18 times more volume than average volume on the daily time frame chart. And the collapse is, if you look here, this percentage, the collapse is 8.32%. So in a single day, Yatharth Hospital collapsed 8.32% with 18 times more than average volume. Now that tells you something. That's called institutional selling. This is not some Tom, Dick, and Harry. This is not some retail investor or your grandmother selling the stock. This is like 8% collapse. So if you see, this is 720 rupees something. Okay. 720 rupees multiplied by 16.32 million. Let's do that. Okay. 16.32 multiplied by 1 million multiplied by 720. That's a huge amount. Let me divide this by 1 crore. That's 1,175 crore. That is the amount of selling that came in this stock. 1,175 crore rupees. 1 crore is equal to 10 to the power 7. Imagine that's the kind of selling that came into this stock. That is institutional selling. That cannot be retail selling. Okay, so the stock was dumped. That too on a falling window. So you see how dangerous it is to hold a stock. Doesn't matter value investing, swing, positional, intraday, whatever you are doing. See how dangerous it is to hold on to a stock which breaks the 50 SMA. See the stock, if it is going to break down like this, it will give you a signal. It will give you some signal. It will give you some clue which will help you come out of the stock. You just need the knowledge to uh, to read those signals. Remember, one of my clients, this was an old video that I had made. One of my clients had taken a position in IDFC First Bank exactly on the day when it broke the 50 SMA. Let me repeat that. One of my clients had taken a position in IDFC Bank stock exactly on the day when it broke the 50 SMA. And you knew what happened after that. Let me take you to that chart. So you see this, the stock broke. See here, the closing price is 91.40 and the blue line, which is the 50 SMA, is 91.53. So on 6th October 2023, the stock breaks the 50 SMA, and that is the exact day when one of my clients had put quite a lot of money. I mean, I cannot tell you the amount, but it was significant amount of money that was put into this stock, because at that time he did not have knowledge of swing and positional trading. At that time when he took the position, he was only doing value investing. He did not know how to read moving averages. He came to know about me and my work somewhere around late or the second half of 2024, or first or second half of 2024. This was much before that. So he had bought this stock much before he got exposed to my kind of work. Okay. And that is why he brought up that stock to me. He was discussing this with me. I don't give any advice, by the way. I am a SEBI registered research analyst. I just help people realize the risk that they are sitting on in their portfolio. There have been a lot of students who have come to meet me personally near the place that I stay. They have shown me their portfolio. I tell them, please don't show me your portfolio, but they show me their portfolio. I don't give them advice. I just help them understand the importance of chart, the importance of liquidity analysis, comparative analysis, technical analysis, fundamental analysis, and market analysis. And a lot of these students, I have noticed that they have cleaned up their portfolio. Cleaned up in a sense, any stock that is trading below 50 SMA is out. Any stock that is trading below 200 SMA is out. Any stock which is showing things like a falling window is out. So these are the basics of charting. Uh, I believe that every person should at least master the daily time frame chart, if not the weekly time frame chart. Okay. So technical analysis is important because you see this. For example, see, look what happened after 6th October. Look at this collapse. Look at the complete collapse, right? So it's very dangerous to hold on to a stock which has broken this blue line. This blue line is extremely important. It is called as the 50-day simple moving average. Okay. Now coming back to Yatharth. Now this could be a good company. Now don't get me wrong here. This could be a great company. I have not done fundamental analysis. And by the way, since this company was in a stage two uptrend after 17 September. This was always coming in my filter. So let's go to that. And I had never bothered getting into the stock primarily because it was not forming a proper base. See, the stock refused to form a base. See, after this, I wait for the stock to form a base, something like this. Let me draw it so that you can visualize it. Yeah. So after this, I wanted the stock to do like this, then here, 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 here. So that's the kind of base that I'm looking for. But that never happened in the stock. So I never bought the stock. So for me, that point number 5 becomes the buy point. But that never happened. So I never entered the position, right? So not so choosing not to go into a stock is also a very important decision that you need to learn to make. Now, coming to Yatharth, there's another reason that I did not get into the stock. So I click on consolidated. You see two violations here. The EPS is not 40% and it is not growing for 3 years. So two violations. One violation here from March 2025 to June, it has declined the sales growth. So three violations total in this area. Then return on equity is less than 17%, four violations. EPS growth rate, the annual EPS is more than quarterly. The quarterly should be more than annual, right? So total five violations. Then you come here, annual EPS is looking fine. It is growing continuously for 3 years. Then you come down, you look at the after-tax margin, it is not at an all-time high. So six violations. So I have 12 different criteria. Out of 12, if I get six violations, that means there are only six factors that could be in my favor, right? Six or less than six. And I want more than 50% of my criteria to be met. So I need minimum 7 out of 12 criteria to be met. So this stock was never fundamentally strong. I am more interested in positional trades than in swing trades because in swing trades, as I have discussed on my channel, as I have discussed in my video course, in swing trades, the risk is slightly higher than positional trades. Okay. So in swing trades, even if I take a swing trade, my stop loss is likely to be smaller compared to a positional trade. My position size is also likely to be smaller compared to a positional trade. I am not saying don't take a swing trade. I am saying when you take a swing trade, you should have complete awareness of what you are getting into. A swing trade is a trade where you have liquidity, comparative, technicals, and market in your favor, but the fundamentals are not in your favor, right? You have to be careful. So, two reasons why, and by the way, let me show you. Yeah, this thing. In Yatharth Hospital, technicals were not in my favor, fundamentals were not in my favor. That this model is so powerful that it kept me away from this stock. And look what happened in this. And this is just one example, by the way. I can give you countless examples of stocks that I have rejected and it's just completely collapsed, right? So it's very important that you understand this model. This will keep you away from trouble because this incorporates a lot of things. And this will reduce the risk in your portfolio by a huge margin. So please study this model in granular detail, apply this model, it will help you. So this is the story of a position taken by my student and a good friend of mine. And I think she came out at the right time. By the way, I sent her a screenshot of this. So just to make her feel good, she felt good by looking at the stock by coming out at the right time. I wanted her to learn this important lesson that once you come out of a stock, uh, if the stock collapses, at least you know that you took the right decision. So when you do that, your level of awareness increases. My mentor Robin Sharma says that with better daily awareness, you will make better daily choices in life. And with better daily choices, you can get better daily results in life. So for that, you need to make the transition from superficiality to granularity. All great progress in life comes when you become granular about your analysis. When you do granular analysis of things, only then progress will come in any aspect of your life, not just trading. Okay, that's the little bit of philosophy. Don't forget to, by the way, don't forget to download this. And if you want to save some time, don't forget to enroll in my video course. I invite you to enroll in my video course. It has already benefited a lot of people. You can check the comments on my YouTube videos. It will definitely help you. I'm very confident of that. So I invite you to enroll in my video course. There's no community as such. There is no forum. There is no webinar, seminar, all of that crap I don't do. It's just a static video course. Come, learn. It will save you a lot of time and do your own thing. Trading is something which is very personal. You don't need any group or membership or all of that. Just learn, apply, and see improvements in your portfolio. Thank you so much.